Hey guys, Stock Saturday, and it's been a bit of a red week. I am down about 17,000, 4.5%, excluding deposits. I did deposit about 4,000. I think it cleared on Monday, so excluding that, and I've sort of invested that into the option side, as you probably guessed. And I have just put another 4,000 in, which again should sort of clear this Monday. Um, so sort of depositing pretty much all of my cash. I sort of got a little bit more actions that I could take. Sort of potentially selling XRP on my crypto side, and sort of one or two other bits and pieces, but that is sort of getting to the bottom of my cash pile. Sort of seeing relatively good deals here and expecting a good sort of second half of the year. So yeah, let's have a look at some news. So Stellantis have released their earnings a little bit earlier than they usually would, and sort of earlier than most of my holdings. So I thought I would sort of go a little bit more in detail on them. It's not looking great, but they have a lot of cars sort of upcoming for release second half of the year and even more next year. So yeah, that's not too bad. They're calling it a product blitz. Lots of vans. I do think people sort of ignore their van side. It's doing remarkably well. Good to see something else coming out from Fiat that isn't a another Fiat 500. That was sort of getting a little bit samey actually. I was actually personally looking to buy a sort of a one of the Punto Abarths not so long ago when they were sort of before they were discontinued, and they sort of that went, and Fiat 500's a little bit small for me, so yeah, that didn't happen, and sort of they got into this stage of just selling variations of the Fiat 500, which I don't think was good. I think they don't know whether they discontinued the Panda for a little bit or just weren't showing it on their website. But yeah, the sort of mini countryman type car as a sort of cheaper version of that could be interesting. So North America isn't looking particularly good. They are sort of saying the battery electric side ramps up second half of the year. We sort of knew that. The Ram models were always going to be coming second half of the year. Dodge Charger releasing an electric, so that'd be interesting. More Jeeps. So yeah, they're reducing production for Q3, sort of ready for the battery electric side. So yeah, it's not looking great, but sort of long term, I still think they can do well in North America. Europe side looking relatively good, sort of down um, sort of year on year, down 380 basis points of operating margin, which isn't great. Sort of, I think getting hit from all sorts really. China, Tesla, sort of growing, and sort of maybe people not wanting some of their cars basically. Interesting there, still number three in battery electric vehicle sales in Europe at 13.2% for the first half. That was actually down 11% year on year, but they closed the gap to number two by 50 basis points, which I believe is BMW Group with VW Group number one. Don't quote me on that. I don't think it's Tesla. I would have to look at the numbers again, but yeah, that's not looking too bad. They're actually still number one in total market share at 18.2%. If you sort of obviously add up all of the brands, they're very sort of Europe-focused brands, so that's not too bad. Looking at some of the other countries, Middle East and Africa, 20.9%. Adjusted operating income, so that's not too bad. It is down 1 billion euros. It's down 14%. I expect some of this is currency differences. And they're number two in Middle East and Africa, and number one commercial vehicles. So again, the vans are quite popular. People need vans, and I don't see a huge amount of sort of buzz about electric vans. Ford have theirs, and there's sort of one or two others, but obviously you've got Fiat, Vauxhall, Citroen, um, yeah, all sort of pushing in the van side. So that's good. South America, record adjusting operating a margin of 15.6%. The actual amount down 7% year on year, but again, some of this is sort of raising prices on individual cars, but less cars sold. And again, 22.7% market share in half one. And then China, it's a very small sort of section of their business, but down 950 basis points. That's not good at all. Lower shipments and FX headwinds. So, yeah, 5.3%. But they do have their sort of joint venture with Leap Motor and sort of an interesting strategy for China. It does seem like almost paying lip service to China. They're not really sort of going after them, which I don't think is necessarily a bad thing. I think China are going to be pushing their homegrown brands an awful lot more. Obviously your BYDs and Neos, Xpeng and people like that. So trying to sort of brute force your way into that market, I don't think is the best way. I think probably there are things like the joint venture with Leap Motor might be the way to go. You sort of get some Chinese exposure outside of China. They sort of come into the EU and hopefully they can sell some in China. Inventory still sort of relatively high, a bit lower than pre-COVID, but yeah, sort of 1.4 million units. They've still got quite a lot in North America, it sounds like. Hoping that's not sort of Ram models that they're not going to be able to sell, but yeah, they might have to sort of do some discounts and take a little bit of a hit, and sort of hopefully the electric side starts to give them a bit of a boost. Yeah, so coming down to their summary, basically all looks pretty terrible. Combined shipments down to 2.9 million for the half. Consolidated down, sort of similar amount, 12%, 10%. Net revenue down 14%, obviously off the back of selling less cars. And sort of the mix slightly changing. It's not the same as revenue isn't the same as shipments down. Operating income down 51%. That's not good at all. And yeah, profit sort of net profit and everything down similarly. So they're hoping for a much better second half, but we'll have to see. They have been doing a lot of buybacks, and we sort of got a fairly large dividend. So if you just look at share price for the year, obviously it's going to look a little bit worse than it is. Part of that is just a fairly sizable dividend. And yeah, I have to sort of take my total position, which I think is down about 20. No, it's up about 20%. But if you include sort of 3 years of chunky dividends in that, it looks a lot more sort of a lot more positive. So yeah, here you go. They're sort of haven't been doing buybacks very much in the past. 2023 they started doing buybacks 1.5 billion, and they're looking to make that 3 billion for the year. This year they've done 2 billion in the first half, and they're looking to do looks like another 1 billion for the second half, and the dividend is sort of steadily growing quite a bit. And their sort of usual fairly conservative guidance, sort of neutral revenue backdrop, double-digit adjusted operating margin, which is still good, and positive free cash flow. Thank God for that. Yeah, as mentioned, their partnership with Leap Motor. So they own 21% of the China side, and sales doubled year on year to 87,000 units for the first half. They are the number 4 ranked Chinese new electric vehicle company. So behind, guessing, Neo, BYD, and either Xpeng or Li Auto. I'm not sure. But yeah, not looking too bad. They've sold 400,000 in total. And the international joint venture, which they own 51% of, on track for September launch. So not too bad. At least one new model to go on sale every year in the next 3 years. So yeah, and other regions to follow in the fourth quarter. Just looking at their balance sheet side as well, it has sort of come down quite a bit since December 31st. Debt is up almost 3 billion. Financial receivables up a bit. Financial securities up a bit, but cash down 7.3 billion. So that's not too good. Obviously, they've been doing buybacks and things, but you would kind of hope that sort of buyback money would be coming out of cash flows and they wouldn't just be drawing down the cash balance loads and loads. I guess a lot of people would say they don't really need 36 billion euros, but yeah, while it's earning sort of decent money, it's not the worst thing in the world. Sort of brings in a little bit of cash flow. I would think drawing this down would be for sort of if rates, come right down, or there's a super lucrative opportunity to buy. They could have been doing buybacks when the share price was much lower, rather than at sort of $20 or 20 euros. And so yeah, 11.9 billion net financial position, where it was 21. And then the financial side is doing a lot better. So yeah, 8.2 up to 10.2 billion. So yeah, a 22 billion overall net financial position, including the financial side, compared to 29.4, but it's still down overall. Oh, and I didn't compare my 4.5% down to the markets. So S&P down 1.54%, and the Nasdaq is down 3.68%. So not good at all for the tech stocks. That sort of is generally closer to my return. Crypto miners and that sort of thing are still sort of not necessarily correlated to the Nasdaq too much, but if they have a big down week, then you can bet some of the crypto miners are going to be going down, and sort of gold and silver has been a little bit rough. So yeah, not too bad, but worse than the market. Just taking a quick look at KGHM performance for the month. So copper down ever so slightly from 59,000 tons to 58.3 thousand tons. Very minor drop. That's fine compared to June last year. But silver 125 tons. So very nice. That's sort of, if you get that every month, you're on for sort of 52 million ounces, which would make them not that far away from Fresnillo, really, and I don't think they get the love for that. I think they are seen as sort of basically just a copper miner with some silver on the side. You're sort of compared to Southern Copper or something like that. They've got sort of more copper and less silver, basically, as part of their mix, where KGHM have quite a big silver side. So I do like that. Economic news, there wasn't a huge amount this week, some sort of PMI data and bits and pieces. I'd rather wait for the ISM data, to be honest, but yeah, S&P Global Composite PMI up, was expected to drop. Similarly with the services PMI, was expected to drop, and that was 56. So anything above 50 is sort of expansion. So in the mid to high 50s even is pretty good. And then not a huge amount there. Some sort of GDP numbers, but it's always out of date. Provisional GDP for Q2, 2.8%, sort of well up from previous, and was expected to only be 2%. So good for the US, I suppose. And then inflation, the sort of official PCE inflation, which the Fed was basically on track, except year on year it stayed flat, and it was expected to drop slightly, but everything else sort of pretty much on track. So whether that means you're getting a rate cut I think it's pretty much priced in for September, and they might sort of, I think it's the next week or two, yeah, Fed meeting next week, July 31st, they might sort of heavily hint at a September cut. So we'll have to see. So looking at the portfolio, Taiwan Semiconductor still sort of taking a bit of a knock. Broadcom taking a bit of a knock. Stellantis as well taking a bit of a knock. Everything is sort of in this portfolio broadly. Vale still dropping below $11 now. So 35% down, excluding dividends, of course. Glencore sort of still taking a bit of a hit. Rio sort of hovering around 50. It's been below 50. Himax sort of coming off the highs. Maybe it was a little bit hyped up, sort of getting to $8 quite so soon. Sort of expecting better things from them in the second half and through next year. But it did sort of rocket up to $8 a little bit quickly. Yeah, looking at the ISA side, it's sort of been all over the place really. Gold and silver miners sort of a bit up and down. Equinox sort of coming down slightly. CleanSpark sort of still $17. Riot did get to sort of high 12s. And yeah, my little Hive Digital new one, I've not added to that in the ISA side at least, but that's doing okay. It was sort of above $4. And the interactive brokers side, KGHM coming down quite a bit. It's only 12% green now. That was sort of 35%, I think, off the back of copper coming down quite a bit, but it's still above $4. That's a decent price for me. But Pan American sort of above $21. That's still fine. It's on the invest side that I've been sort of really piling in. Down to sort of 100 quid cash, although as I say, another £4 should be clearing Monday. Even with that deposit on last Monday, total amount is down. But yeah, I've been piling into Equinox. I think this was at 492 contracts last week, up to 562. It's still a stock, sort of as I highlighted last week, that I see a huge amount of potential in. Himax has been, obviously with the stock price coming down, there's a little bit less hype at the moment, so the options take quite a hit. That was at sort of 24,000 at one point, down to 14,000. Not been buying any more. Same with Core, 17,500. CleanSpark, sort of not down too much really. I did buy quite a bit of Hive. I wasn't expecting to be sort of getting a chance to buy any more Hive. I thought that might have been it. It is averaging up. Could have sort of been buying this quite a bit cheaper not so long ago, really. But you live and learn, and I still think it's a decent potential return. You can't get anchored to the price it was at before, and yeah, if you think it's sort of still a good return going forward, you just accept paying a little bit more. Core Scientific, sort of still, it's barely moved, I think, because price is still doing well off the back of their AI side. Hive have an AI side, but I don't think they're getting the love for that. That's sort of drastically growing over the next year. And yeah, Riot sort of coming down a little bit, Fortuna coming down a bit, but I do see very, very positive results for this over the next year. So it's where I'm piling in. I would imagine, unless things change, next week's money will again be going into Equinox and Hive if they don't move. So making it a very, very concentrated bet, and sort of if it doesn't go my way, then potentially all of this could be close to zero in the next year. So it'd be a lot of money to lose, but I can't see that happening, to be honest. So always think long term. That is the way. Leave your thoughts in the comments below. If you guys are sort of buying anything at the moment, or if you're just raking in the Trading212 cash while it's still at 5.2%. And like and subscribe. See you soon.